Despite the small movements on the chart, my long position ended with a pretty good result. Are you curious what it was? And what is my next plan? Stay tuned. Hey there. Welcome to another episode of Crypto Market Analysis, where we meet every week to analyze Bitcoin, Ethereum, NO, and a selected altcoin. We meet up and take a look at the charts from three different perspectives: technical, on-chain, and fire charts. And as a result, you won't find such condensed analytical knowledge as we serve here anywhere else on the internet. You appreciate that? We've surpassed 60,000 subscribers. This is thanks to you. Thank you very much for that. But I also know that a lot of people who watch Kanga Trends don't actually subscribe to this channel, so now is the perfect time to hit that subscribe button. Turn on the notification bell, give a thumbs up, and leave a comment, even if it's just for the contest. And remember, the content in these materials does not constitute investment advice. What you see here is solely my subjective opinion about what I observe on cryptocurrency charts. For advice, consult a licensed advisor, or just do what I do. Conduct your own research. If you're okay with that, grab your coffee and let's get started with the analysis. So what has happened on the Bitcoin chart in the past few days? Well, first of all, we can see that the ninth red candle of the TZ sequential indicator, which lit up right here, perfectly marked the bottom of the current correction, at least for now. Besides that, we can see that the price is rising, but these increases are really very, very weak. We can see that Bitcoin has repeatedly hit the $112,000 zone. This is the line that we have marked here. We've had it marked here for a very long time, and several times it has tried to break through it. At times it even looked quite promising. It already seemed like these levels would really be broken. Unfortunately, there was a pullback. Importantly, in exactly the same area at $112,000, the 100-day moving average is located, which is our yellow line. This means that the resistance at this point has double the strength. Just above it, another one appears, the red line, which is the 50-day moving average. In this case, it hovers around $114,650, so it's actually quite low. Basically, within a single day, Bitcoin is capable of hitting that value and probably pulling back again. We can also see here that an inverted head and shoulders pattern is forming. I mentioned this in the previous video that it's easier to see on lower time frames. And indeed, now this pattern is closing, and theoretically, one could assume that this is a trend reversal signal. But unfortunately, I checked the volumes on lower time frames. Volumes here serve as confirmation or negation of the pattern, and in this case, unfortunately, we don't have confirmation. Therefore, we can't treat this head and shoulders, this inverted head and shoulders, as legitimate. Nevertheless, I still believe that in the longer term, Bitcoin is finding its price bottom in this area. Let's also check the RSI. The RSI at this moment, it keeps hitting the 50 level. So just like the price is hitting 112, just like it's hitting the moving average, the RSI here is also acting as resistance. Unfortunately, this could mean that in the longer term, Bitcoin will continue to struggle with this value. And perhaps it needs to pull back deeper to draw in liquidity in order to break upwards. And as for drawing in liquidity, that's actually very justified, which we'll illustrate on the chart that you'll see on your screens in a moment. Besides that, it's also worth paying attention to what's happening with the historical volatility indicator. Lukasz mentioned this indicator yesterday on A Quarter with Kanga. Let me show you what happened here. Well, we've had a very sharp drop down. This indicator is dropping to levels below 15, which historically, as we widen this chart now and look at a longer perspective, still staying on the daily interval, we can see that these are basically the lows of this indicator in recent times. This means that it has often bounced off these values, which then led to increased volatility. Attention, increased volatility does not necessarily indicate the direction in which Bitcoin will break out. So there can be various assumptions. I already have my own theories, and I'll share them with you in a moment. In any case, it's very clear that Bitcoin is preparing for a big move. This move could happen upwards, but I wouldn't be surprised if it goes down first. Why? Well, I'll get to that in just a moment. There are many reasons for the increased volatility. First and foremost, economic data from the United States is coming out, which will significantly impact what happens next week. And next week, after all, we'll get information about what the interest rates in the United States will be in the near future. If they are lowered, the financial markets will get an extra boost. In the last video, I mentioned that this is probably not yet priced into Bitcoin. Maybe I was wrong. I'm not 100% sure, but I'm considering that possibility. Maybe the price will move just before the results are announced, right before the announcement of the new interest rates, or simply in reaction to them. In any case, what's happening on the charts is very significant, and here we can see that the current boredom, this consolidation we're observing, is causing the market to be highly over-leveraged. And right now in front of us, we have the Bitcoin liquidation map. This is the kind of liquidation map that I've also been sharing recently on my Twitter. If you want to stay up to date with it, I encourage you to follow me. And we can see very clearly that there are a lot of longs. Here are the longs that will be liquidated if the price moves down. by a really small amount actually, because we can see that at the level of, say, $110,000, which is exactly where we are right now, there are potentially almost $1.5 billion worth of liquidations in that area. These are huge amounts. This is liquidity that can be tapped precisely so that Bitcoin can break higher at a later time. Besides that, it's worth taking a look at what's happening lower down, because such highly leveraged positions are found even down to the level of 108,624. We can see them right here, and they exceed $2.3 billion. For me personally, these are the areas where I consider spreading out my buy orders, or simply going long. And this is part of my new strategy. Recently, I went long from 110. We'll get to that in a moment and discuss what the results were. Now, I'm considering going long from an even deeper level. But let's also look at what happens next, meaning if Bitcoin breaks higher and, for example, reaches a certain value. In this case, 113,900, just under that. Here too, we have very large liquidations, and they amount to over $1,130,000,000. So this is really liquidity worth capturing. The first move that appears after this consolidation doesn't have to be a reliable one at all. It could very likely be a false breakout, and I absolutely wouldn't be surprised if this breakout moves downward just to grab liquidity and then later pulls Bitcoin's price upward. You often ask in the comments about the TD indicator. Sequential because it's hard to find on TradingView. And indeed, it is hidden. Recently, it has basically disappeared completely from TradingView, but sometimes it shows up under a completely different hidden name. You can now see that name here. I asked our editor, Wojtek, whom I warmly greet, to provide you with the information on the exact name of this indicator. If you can please greet him in the comments as well, because he does a great job for you. The price action is narrowing not only on the technical chart, but also on fire charts. Let me remind you once again what fire charts are. It is a compilation of the largest order books, the biggest multi-million orders in the world. In this case, we have a blue line in front of us, which represents the price of Bitcoin, and horizontal lines. Those that are above the price are lines with supply volumes. The brighter they are, the stronger they are. And with demand volumes, those that are below our blue line, of course, it's the same. The brighter they are, the stronger they are. And we can see very clearly that over the last, basically not even 2 days, the number of buy orders has been increasing. And they're increasing basically. From this point here, we had a pretty good distribution of such orders at the level of $110,880. And here, the purchase volumes amounted to $30 million. That's a lot considering the values we've seen in recent weeks. They have basically almost tripled. In addition to what we have observed, we can clearly see that right now these particular values are widely distributed throughout the entire designated area. Basically from 111,020 down to about 110,750. And these are exactly the buy clusters that will defend the price against a potential drop. As for sell orders, here we also see a distribution that clearly stretches from 112,800 upwards to 114, and at 115. We can already see slightly higher volumes here, and they are in the range of several $1 million in Bitcoin waiting to be dumped onto the market. Who is currently participating in trading? Let's take a look at our orange line because we've been referring to it quite often lately. It represents retail investors, meaning those wallets that hold between $100 and $1,000. And they are not currently buying, but the wallets in a buying trend are the brown wallets and the purple wallets. The brown ones are the wallets of the largest whales, those that have between $1 and $10 million in their balance, in order to buy Bitcoin at current prices. And besides that, the purple wallets are the second largest. They in turn hold between $100,000 and $1 million in their balance, for the purpose of doing exactly the same thing, that is, buying Bitcoin. So how did the story of my long from last weekend? Well, with a profit of 30.65%. I reported this profit on my Twitter, just like I do with all the setups I basically use on Kanga futures. I know that in the comments under the previous video, there were many doubters saying that I probably wouldn't make any money from this. Well, it turned out that I did. This is the second trade, which started at the level of $110,000, and the second trade that ended with a very similar story. So I set a stop loss when I was in a profitable position. This was to avoid losing because at one point the unrealized profit was over 50%. A very nice potential profit, although I knew that unfortunately the price could dip slightly. Well, as it turned out, it dipped even a bit more. Stop loss at the level of 111,700. It allowed me to secure profits of about 30.65%, as mentioned. Well, you also sometimes ask me in the comments why I don't set a stop loss earlier, since I open a position, and by the book, basically the right thing to do would be to set a stop loss immediately when opening a position. Well, considering that I very often use leverage, 20, setting a stop loss. With my strategy for entering the futures market, it basically wouldn't make sense because every time I would end up with a loss. Every time there are downward swings that would wipe out my position the moment it moved, for example, even slightly, basically right away. That's why I wait and basically only set up a futures position at moments when I am really sure, highly convinced that the price can soar upwards. And I wait for that moment when I am basically an unrealized profit, so that right then, somewhere in that area, I set a sell order, a stop loss order. That's my strategy. I play with a certain partial portfolio, basically, which is dedicated solely to the futures market. I allocate a certain percentage of that portfolio to individual trades. And that's basically what allows me to behave this way. If you want to use stop losses, I encourage you to do so, although with 20x leverage, I'm not convinced that they are really properly applicable. It's your choice. Remember, what I'm saying is not investment advice. Find your own strategy and your own path in the futures market. If the price action on the Bitcoin market is boring, then what can we really say about what's happening on the Ethereum chart? Here, for 6 days in a row, we've basically had very flat trading. Flat, though we do see some wicks sticking out in one direction or the other. Basically, something is happening here, although the price is closing within a very narrow range each day. It's worth noting that last Friday, we had a slight flash crash on Ethereum here, and the price found support at the 50-day moving average. Very nice support, a very nice rebound. We have a flattening and a continuation of this movement, this sideways trend, whatever you want to call it. Besides that, it's worth paying attention to what's happening on the RSI, and on the RSI we have a constant defense of the 50 level. It must be said, however, that Ethereum is behaving a bit differently here than Bitcoin, because at the moment, Bitcoin treats the 50 as resistance. Meanwhile, Ethereum treats it as support, but this support leaves much to be desired. This is not a clear rebound. It's actually a very flat way of moving, which is rarely seen. Basically, I wouldn't be surprised if it got broken. In addition, we are observing historical volatility. This is the chart at the bottom, this indicator at the bottom, which in this case is dropping to around 30. In the case of Ethereum, it doesn't have to drop as low as with Bitcoin, where, for example, we currently have 15 or slightly below 15. And these are already rebound points. In the case of Ethereum, increased volatility basically starts from this level right here, 30. However, I would expect it to go even lower before a stronger move occurs. As for buy and sell orders, where I expect any buying reactions, basically, well, it's at 50, the moving average. It's a good area here to enter the market, whether through spot or through futures. As for me, I still have my order open on futures around the $4,000 level. I'm not convinced whether the price, I'm not really sure if it will go down there, although I do see some slight potential for it, and I've even slightly increased my current pending position. So I'm waiting for a move here, which in my opinion could also happen on Bitcoin, and that's also what the liquidation map, which I'll talk about in a moment, is showing. So here I would basically expect some liquidity grabs and movements upward from 50, from 4,000, or possibly a bit lower, and that would be a move that should trigger another upward movement on Ethereum towards a new ATH. And as for the liquidation map on Ethereum, well, there's plenty to cut through here as well. As for the longs themselves, let's take a look at these high profiles that are present here. Right behind them, there's this lower profile, which I'll take into account, and here we have a price around 4,136. And at the moment when Ethereum reaches that level, longs worth 1,500 million will be completely wiped out from the market. This is really liquidity worth capturing before an upward move occurs. Besides that, let's also look at these volume profiles that are here. They're also very high, and basically they end, the last high bar is at values around $4,200, just under that, and the total value of all the longs that could be liquidated, basically up to this position, exceeds $2.1 billion. So that's really, really a lot. My long position, if it were to be set, in fact it is set, if it were to be triggered, it would only start somewhere from here. So up to this value, there is $2.5 billion to be liquidated, which is quite a lot. It's still a long way to reach that point, and it's not necessarily going to be achieved, considering that everything to be liquidated is basically located a bit earlier. But if this long gets triggered, then my profits should really look quite good, because I expect the price to soar higher afterwards. And here, on the other hand, it's the shorts that are up for liquidation, shorts for which I'll just mention the value. Up to the value of around 4,450, there are nearly 1.8 billion of them. So that's really, really a lot. This is liquidity that's just waiting because the market is bored, waiting to be captured during increased volatility. And then there's the fire charts for Ethereum. Here, looking at the chart, we can say that it's pure chaos, at least in theory, because in practice, if we compare what we see right now with what we saw on the technical chart, everything starts to make sense. We can see the trading zone in which Ethereum is currently moving, and it's a very narrow price range, basically reflecting exactly what we just saw on the technical chart. There are a lot of sell orders above the current price and a lot of buy orders just below it, and this is causing the price to consolidate at the moment. The CVD shows pretty much the same picture, where basically every line you could say is moving in a different direction, fortunately all to the right. And we can see that the brown line, which represents whale wallets, has been a bit more active over the past 2 days, although they've also been slightly toning down this activity in the last few hours. The particular buyers who truly stand out from this entire and diverse group are clearly represented by the prominent red line. These are specifically the wallets that basically hold a significant amount, somewhere between $10,000 and $100,000 in their current balance, and they are actively buying at this very moment. Apart from that, the purple line, which is shown here at the bottom, is rising slightly, but at this point it's not really worth mentioning in particular because these movements are relatively flat compared to previous ones. And the orange line, which represents retail investors, we can see that over the longer term, there is a downward movement here, which means that at the current Ethereum prices, retail investors are not making purchases. The altcoin chosen by you. For today, it's ETH, which is basically a cryptocurrency that has recently been in a pretty solid upward trend. ETH, which is signaling through TD, sequential, that it may currently be forming what's called a double top, which is a pattern indicating a possible halt in this upward trend. But the question is, does ETH actually perform as well as Bitcoin or Ethereum in this regard? And here I have to admit, it's worth taking a closer look at this. Why? Well, primarily because Ethena is a cryptocurrency with a lower market capitalization, which means that very often buying momentum outweighs the strength of the indicators. And such a situation has occurred here more than once. For example, if we look back at the history from 2024, we can see that here, TD, the sequential indicator, did a nice job of catching the local peak, although it wasn't particularly high, but there was indeed a correction here. However, here, it was already wrong. Here it caught it, here it caught the bottom. Here it was slightly off. Well, there was indeed a correction, then it happened, but the indicator appeared way too early. And basically, it overshot the values that should have been indicated here. An even bigger mistake was made here. That is basically already in November 2024, when we saw a very strong upward trend, which caused Ethereum to break out much, much higher than where the T sequential indicator appeared, suggesting a reversal or consolidation in this upward trend. And we have quite a few such signals. Over time, we can see that they became increasingly accurate. However, in the current upward trend, there was also one mistake, and it happened right here, basically in June, or rather in July of this year. And this upward trend soared much higher. It was only the second illuminated TD indicator. The sequential indicated a local peak, and it actually pinpointed it quite well. As for what might happen with Ethereum now, we take into account, of course, the fact that the TD sequential is signaling a trend reversal. And we also take into account that we have the 50-day moving average here, which serves as a very nice support for the price. If we were to also turn on the 200-day moving average at this point, we would notice that we are also after a golden cross on ENA, and we can see that this could be a signal for a completely increased momentum on this cryptocurrency. So if the price pulls back, personally, I would place my buy orders for ENA somewhere around the 50-day SMA, which is just under 67 cents. But if ENA breaks out, well, I see some very solid potential here. Impressive possibilities for it to reach prices around 129. These are the peaks that were reached here. Admittedly, there are some long wicks here, so I would set my sell orders slightly lower. In any case, there is momentum, and I wouldn't be surprised if, for example, there was a correction down to the 50-day moving average and then a breakout from there to those values. To me, that's very reasonable, but you also shouldn't ignore indicators like the RSI. The RSI had already shown a bearish divergence here earlier, or rather a bearish momentum discrepancy between what was happening on the indicator and what was happening with the price. The price was moving up, the RSI was going down, and we had a bit of a correction here. This divergence, this disproportion, is basically still in play because we can see that we keep getting lower lows here while the price is trying to break upwards. That's why, in my opinion, consolidation before a breakout and essentially a move toward the 51-period moving average is much more likely, as the first one, preceding the breakout to the upside. Currently, the TD sequential absolutely does not discourage buyers in the case of ENY. And we can see very clearly that the brown wallets, meaning the whales, as well as the purple wallets, the next 100 largest, are currently accumulating NA, or rather Ethena. Besides that, it's worth noting where the supports and resistances are located. Support is found around 77 cents, while a significant resistance, a more substantial resistance, starts at around 88, 87 cents, essentially. And these are the values that should be observed in this case, in the case of NA. And if you would like me to transfer it to your altcoin, remember that it's a very simple thing to do. All you need to do is register on Kanadze, and you'll find the registration link in the description of this video. You can browse through the cryptocurrencies we have and choose the one that interests you the most. Just remember 3 basic rules. First, it has to be a crypto from Kanga. Second, it can't be Kangi. Third, it can't be any meme coin. And also check out the futures market, because something will appear there that isn't available on spot, namely XRP. If you're interested in XRP, the comments are open. Let me know. Maybe it'll show up in the next video. And now a quick overview of on-chain metrics, and today I've prepared 3 of them for you. Let's start with the 60-day cumulative growth. This is basically my personal indicator. FOMO, which suggests that the end might be approaching of the cycle. But obviously, since we don't have any growth, we most likely can't talk about the end of the cycle at this point. And this is reflected very nicely by the indicator, which is reaching, attention, 0%, 0% from which a rebound might occur. Historically, this rebound often occurred, which also shows how much room for growth still remains for Bitcoin. In addition to that, the MVRV superposition indicator after halving, which is a post-halving superposition indicator, is saying very similar things. Historically, we have had a pattern where each time in every subsequent cycle, this indicator would reach values that were one level lower, cascading slightly downward, and we know we have identified that in this season, basically in this growth cycle, most likely Bitcoin is aiming to reach level 3. And currently it is really very, very far from that, as it is recording a value of 2.10. And these values, when looking at the chart itself, are lower than the all-time high that was reached on this indicator. In the current cycle, the price, as we know, is somewhat higher. Not higher than the all-time high, of course, but higher than those indicators, those values that this indicator historically reached at previous all-time highs during the ongoing upward trend. Besides that, it's worth recalling what the Bitcoin balance on exchanges looks like. And here, recently, we can see a slight flattening and calming of the upward movement that we've been observing for quite some time. We saw it starting around mid-June, basically, up to the present moment, and now we have a slight flattening, and perhaps this will be a trend reversal. If that's the case, I'll definitely keep you updated. It's time for a contest. Let's start with the rules. Present your own analysis of one of the cryptocurrencies I mentioned in today's material. So it could be Bitcoin, it could be Ethereum, or ETH. Present your technical perspective, whether it's on-chain, fire chart, sentiment, fundamentals, whatever you like. And remember, you don't have to agree with me. The author of the most interesting comment, which will be posted by Friday at midnight, will win 20 KNG from me. And attention, there is no winner for the previous episode. With the current volatility we're seeing on the chart, no one entered the contest. Maybe it's just because of what's happening. Right now, it's discouraging. So in the next episode, we'll pick 2 winners. Really, your chances are doubled. It's worth taking advantage. I invite you to join the contest. That's all for today. If you enjoyed it, and deep down you know you did, and it's your first time here, be sure to subscribe. And please rate this episode on a scale from 1 to 190, where 1, that's weak and bland, I don't want to see it here again. 1 to 90 means fantastic, and I want more of this. And if you want more, I'll see you next week. Bye.